So MicroStrategy is down 3,000 plus points today, which means that MicroStrategy is going to be down because MicroStrategy is a proxy for Bitcoin. But this pullback actually stems from last week on news that Kerrisdale Capital issued a short report, and they said that Bitcoin holding companies' valuations may be overinflated. Now, as we can see from the weekly chart, MicroStrategy has had a nice run since mid-February, or towards the end of February, when the stock has more than doubled. Now, before we continue with the analysis, let's look at this article. It is coming from Investor Place. So, again, tech play turned Bitcoin holding company. MicroStrategy was down nearly 10%. This was one day last week, but again, still up over 150% year to date. The key catalyst for the decline was a short report announced by Kerrisdale Capital on X. After MicroStrategy's incredible rise this year, short sellers were bound to start paying attention to what the company should really be worth. Now you got to remember that MicroStrategy owns over 200,000 Bitcoin, and so Michael Saylor believes that MicroStrategy is the real ETF. Now, these short sellers are now alleging that MicroStrategy's valuation have deviated from its intrinsic value based on how its Bitcoin is currently being valued by the market. According to the Kerrisdale report, investors are now valuing the company's balance sheet at more than double what the company's Bitcoin holdings are worth, placing a value of roughly $177,000 per coin on its digital asset holdings. Now, some deviations between the company's holdings and where investors expect Bitcoin prices to be headed may make sense, but this is a rather large discrepancy. Today's market participants appear to be attempting to recreate this bottom-up valuation approach and may be coming to a conclusion that the rally has been too much, too far, too fast. Now, what we've seen is that MicroStrategy has purchased the equivalent of $4 billion worth in Bitcoin. Their total holdings now amount to about $10 billion. They've seen their market cap go from below 10 to roughly 30. So I can understand the report by Kerrisdale, but there's no denying MicroStrategy's strategy, and that was to hedge against cash, the dollar going down in value. And the chart suggests that strategy is paying off and will continue to pay off. Now, this is the big picture. This is the monthly chart, and yeah, previous high established back in the previous bull cycle. And so if price can get back down to this level, $1,300 level, that would be a great opportunity to start laying in to go long. Price nearly hit most recent highs at $2,000, which is the round hole psychological number, which the smart money likes to tend to play with. These round hole psychological numbers like 1,000, hundreds, any hundreds, etc. And going back to the weekly chart, you can see how this weekly buys level worked out. Although I think this is a daily buys level. Which I'm going to turn blue. And I'm going to show you. We got a rallying price, basic candle rally out, price pulls back, goes deep into the zone, and then you get the next impulse move higher. Now, this is a level worth monitoring. Again, price penetrating the zone nearly 100% tells me that the unfilled buy orders are used up. However, if you scroll over to the left, all-time highs, resistance, now support. So I anticipate this level holding again. And I do anticipate MicroStrategy making new all-time highs going into the summer months. Thanks for watching. Subscribe. Please like the video.